Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the sell side had been dominant and our larger time frame bias has been bearish throughout the last few days anyway. So at this point, heading into the open, as long as ES can hold below 1922 and below 26 to 28.5, we know that the sell side can maintain control. The challenge with today is going to be the fact that ES is already set to open on a pretty wide gap down, and responsive buyers can also be active on first test of these support areas. So we're already seeing some buying coming in off of the 11 quarter level, and then below that we have 07 quarter and the initial support zone at 1900 to 1903. Now, as long as ES can hold below 1922 to 23 and 26 to 28.5, there's still potential for the market to continue going down into the 1900 to 1903 area, but we are going to want to see that sustained downside momentum in order for that move to take place. So what we want to make sure is that we're not shorting a market where it's turning into a failed breakdown attempt. And for that reason, we want to see that sustained downside momentum off the open and the market holding below, ideally 22, but worst case scenario, below 26 to 28.5. A move back above 26 to 28.5 would signal a failed breakdown attempt, and then from there we can go back up and test the high volume node at 32 and the initial resistance zone at 34 to 36, and potentially even a move back up to 40.75 to 42.75. But 26 to 28.5 is really going to be the deciding factor on whether ES has any potential to go back up. And given the overall bearish bias, sellers can still be active on first test of every resistance zone along the way back up. So heading into the open, keep an eye on the 1922 to 23 area. Ideally, you want to see ES holding below that. And if it does, then we know that the sell side is continuing to be dominant, and we could get a retest of the overnight low. And from there, we can go down to 07 quarter and 1900 to 1903, at which point responsive buyers can step into the market, but the overall bias would continue to be fairly bearish. So off the open, it's really going to be about whether we have that sustained downside momentum and broad market selling remaining in the market. So our bias is going to remain very bearish below 22 and below 26 to 28.5. But in the event that we do start seeing some upside momentum and a move back above 26 to 28.5, then we'll know that the market is back in more of a balanced state, and we'll have to be a little bit more neutral to bearish on our bias. So those are the main ideas heading into the open. Let's see if the sell side can maintain firm control below 22 and below 26 to 28.50, and we'll take it from there.